Good morning, traders. This is Evelyn from Astra Montis, and I'm here to bring you the latest insights for the week of September 2nd to September 6th, 2024. Let's dive into what to expect in the upcoming week. This week unfolds against a backdrop of intense global economic scrutiny and anticipation. As markets pivot in response to key developments across major economies, attention is drawn to the Federal Reserve's potential rate cut strategy ahead of the non-farm payroll (NFP) report and Wall Street's reaction to crucial employment and ISM data. Meanwhile, the Bank of Canada's expected rate cut and the pivotal GDP and PMI data from Australia and China will play critical roles in shaping market sentiment. As NFP week approaches, investors are closely watching for clues about the Fed's rate cut strategy. Weaker than expected July employment figures sparked market turbulence and recession fears, leading to predictions of 125 BPS in Fed rate cuts by year-end. Subsequent data eased these concerns, but Fed Chair Powell's dovish speech at Jackson Hole maintained the dovish outlook. Investors still anticipate interest rates to be 100 BPS lower by year-end, with a 35% chance of a 50 BPS cut at the September 18th meeting. How will Wall Street react to the upcoming employment report? A weak report might rekindle recession fears, while equity investors could cheer the prospect of lower borrowing costs. The outcome of the ISM manufacturing and non-manufacturing PMIs for August, due on Tuesday and Thursday, may also play a critical role. The Atlanta Fed GDP Now model estimates a solid 2.0% real GDP growth for Q3. If the ISM prints indicate improving activity, investors might retain confidence in the U.S. economy, boosting their risk exposure. The Bank of Canada BOC is expected to announce its third straight quarter-point cut on Tuesday, with a 15% chance of a 50 BPS cut. Recent data, including slowing GDP growth and rising unemployment, justify the anticipated rate reduction. The BOC's dovish stance may pressure the loonie, although its broader outlook remains unchanged due to already priced-in rate cuts. Despite the loonie's recent gains from increased risk appetite amid aggressive Fed rate cut bets, the upcoming Canadian jobs data, released alongside the U.S. employment report on Friday, could influence its trajectory. The dollar-loonie downtrend may persist if U.S. data supports further Fed easing. Aussie traders face a busy week with Australia's Q2 GDP data on Wednesday and China's cakes in manufacturing and services PMIs on Monday and Wednesday. The RBA recently held interest rates at 4.10%, signaling readiness to tighten if necessary, but markets expect a 25 BPS cut by year-end. If Australia's GDP or China's PMIs disappoint, it could confirm market expectations for a rate cut, potentially halting the AUD's rally. Conversely, strong data might bolster the AUD by reducing the likelihood of immediate rate cuts. This week has been marked by significant economic developments across the globe. From the heightened anticipation of a double Fed cut ahead of the NFP report to Wall Street's reaction to employment and ISM data, and the Bank of Canada's dovish stance, the global economic landscape remains dynamic and challenging. The crucial GDP and PMI data from Australia and China further add to the complexity. Stay informed as we continue to monitor these developments closely, understanding their profound impact on markets and investors moving forward. To conclude, as we navigate through this week's trading landscape, it's essential to closely monitor these significant updates. We appreciate your confidence in our insights and wish you prosperous trading in the days ahead.